Welcome back to another weekly market outlook. This is for the 13th of May 2024. And obviously this week we are going to be anticipating the US inflation numbers, and definitely something to talk about this week. All right, let's take a look at last week first. A couple of central bank announcements. We've got the announcement coming out from the RBA and the Bank of England, both of which didn't change their interest rate, but the comments coming out from the RBA was a little bit less hawkish. It was sounding a little bit more on the dovish side, more open-ended. Without covering the possibilities that they're not going to be hiking interest rate again, but the way they communicate the message, it was a little bit more on the dovish side. Obviously, that puts a lot of pressure onto the Australian dollar as well. Coming out also from the Bank of England, if we take a look at the official bank rate votes, it was actually a little bit below the forecast, where they're expecting 9 votes of unchanged rates. There were actually 2 votes for interest rate cuts in this month's meeting, so does put the path for the Bank of England to potentially cut interest rates at around June or August at this point in time. We are definitely going to be looking for a summer interest rate cut from the Bank of England. Other than that, we have the UK GDP numbers. If we take a look at the UK GDP numbers, it was a little bit better than what the market is expecting. It grew at 0.4%, which is a lot higher than last month's growth of 0.2% and also the expectation of 0.1% growth. All right, let's focus on this week's number. Obviously, we are looking at employment numbers coming up from the UK. That's going to be on Tuesday as well as on Thursday for Australia. So if we take a look at the claimant count change from the UK, we're expecting a little bit of an increase from 10.9 to 13.9. And then we have the Australian employment numbers. If we take a look at the unemployment rate, we are also expecting the unemployment rate to pick up from 3.8 to 3.9%. Now, focusing on the US inflation numbers, on Tuesday, we are going to have our PPI numbers. If we take a look at the PPI numbers, we're expecting the monthly growth to actually go up from 0.2% to 0.3%. If we focus on the headline inflation number on Wednesday, we are expecting the headline inflation to drop down a little bit from 3.5% to 3.4% annualized. If we take a look at the growth, monthly growth remains at 0.4%. Now, this is actually very interesting because if we take a look at the growth here on the inflation in the US, even if there's an annualized growth drop from 3.5% to 3.4%. If the monthly growth does not drop below 0.4%, that's actually going to put the inflation on a higher trajectory. In fact, we're looking at a 3-month average of 5.2% inflation growth in the US. So if we have that number coming in as expected at 3.4%, that's still going to be considered a very high inflation growth in the US. And we're still looking at the scenario where the Fed are definitely going to be keeping the interest rates higher for longer here, because inflation, even though it might look as if it dropped from 3.5% to 3.4%, if the monthly growth didn't drop from 0.4%, that's actually going to project a much higher inflation in the coming 3 months. All right, so other than that, we have the weekly unemployment claims coming up from the US. Obviously, that's going to be on Thursday as well. So yeah, I think the main focus for this week is definitely going to be on the inflation numbers coming out from the US. So again, with a little bit of a warning here, even though we might get the data as per consensus at 3.4%, it does still mean a higher inflation in the US, and that can actually still drive the US dollar higher unless we have a sudden drop to about 3.2% or maybe 3.1% in terms of the annualized CPI. Then that's the only thing that could actually weaken the US dollar. So maybe just a little bit of a fair warning for what's ahead for this week. All right. Let's take a look at the Aussie USD here. For the Aussie USD, this one here remains stable. We are looking at the range there. Aussie USD is still trading above the fair value gap there, still above the Ichimoku cloud. So as long as we're still above 65.50, we're still looking at more of a sustained growth for the Aussie USD. However, if prices drop below 65.50, then we are actually definitely going to be looking for a much deeper pullback on the Australian dollar here. We have 65 cents and then 64.50. Ultimately, the stronger support is definitely going to be at around 64 cents for Australian dollar. All right. Next up is the EURUSD, and the EURUSD here, if we take a look at the condition on the EURUSD, we're stuck here at 1.08. We are unable to surpass 1.08 at this point in time, and price has been trading back and forth last week between range 1.0750 to 1.08. There's a little bit of a spike here and there, but the main composition of the open and the close remains between range at 1.0750 and 1.08, and I would still say it's best to not trade the EURUSD until it actually gets out of this range here between 1.0750 and 1.08. So again, main driver is definitely going to be the inflation numbers coming out from the US, and again, there's actually a higher probability that we might actually fail at 1.08. So there's actually a much higher probability, that's actually more than 50% here, that price could actually break below 1.0750 this week, especially if the inflation remains hot in the US. Similar situation with the pound USD here. If we take a look at the main bulk in terms of where it actually trades, it still trades between 1.25 and 1.2550. Sure, it spikes here and there. We've got a little bit of a spike towards 1.26. We have a little bit of a spike below 1.25, but the open and the close remains within range at 1.25 and 1.2550. And if we take a look at the RSI here, it has remained flat at 50, and definitely waiting for the inflation numbers before we can actually anticipate a little bit of a breakout here for the pound USD. Overall, from a technical perspective, we're still below the Ichimoku cloud. We're still rejected by that 61.8% Fibonacci retracement on the daily time frame. So again, there's a higher probability if inflation remains hot, then we are likely going to break below 1.25 again for the pound USD. Therefore, in terms of anticipating where it can actually go, we are anticipating a move back towards 1.2450 first, and then we are anticipating a much deeper drop there towards 1.2350 on the pound USD. All right. Next up, we have the dollar Japanese yen. Obviously, with the dollar Japanese yen, we have been looking at a buy on the dip scenario. And if we take a look at the movement here, if you take a look at exactly where it's slowing down, it's actually very interesting. It's actually slowing back down around 156. So it seems that even carry traders are not willing to aggravate the Ministry of Finance at this point in time. So we're still looking at traders being a little bit more on the cautious side around 156. But again, if we take a look at the overall movement here on the dollar Japanese yen, technically this is still within an uptrend, and we basically just bounced off a very critical support and a critical retracement level there around that 152 level. The RSI remains flat. We still need this one to nudge a little bit above 60 before we can actually see any potential run to the upside. But yeah, it looks like this one here is still being bid, and we're still looking at a immediate resistance at 156. But once we clear off 156, I'm not expecting a huge quick jump to the upside for the dollar Japanese yen here, but it's more of a gradual increase back towards 157 and 158 on the dollar Japanese yen. So again, the main focus this week is definitely going to be the inflation numbers. So yeah, good luck with the trades, and I'll see you soon.